Thanks so much for joining us today. For the next 30 minutes, give or take, we'll be exploring the idea of converting cannabis businesses to ESOPs. We'll get into the specifics momentarily, but to set the stage, what is an ESOP? ESOP stands for Employee Stock Ownership Plan. In the simplest terms, an ESOP is a retirement plan where the ownership of the company is held in trust for the benefit of the employees of the company. The trust buys the company on behalf of the employees and uses the profits of the company to pay off the loan used in the purchase. Why are we talking about ESOPs, and why are we talking about them in the context of cannabis businesses specifically? As most, if not all of our attendees know, the tax treatment of cannabis businesses is significantly impacted by federal law, specifically Internal Revenue Code Section 280E. This section, again, as some of you know, or most of you know, prevents businesses involved in the, quote, trafficking of Schedule I controlled substances and Schedule II controlled substances from deducting standard business expenses, even if you're operating legally at the state level. As a result of this, cannabis businesses can only deduct the cost of goods sold, or COGS, as you might hear some people refer to, from their taxable income. What's the result here? It leads to higher effective tax rates compared to other industries. So some sources estimate that the effective tax rate for cannabis businesses, depending on where you are in the ecosystem, it's different for dispensaries, growers, and processors, but can be as high as 80% or more. In a moment, you're going to hear from my partners, Andy Daly and Adam Fayne. Andy is resident in our Minneapolis office, and he advises employers, including employee-owned companies, on legal issues connected with employee benefits. He focuses in particular on matters involving ESOPs, good thing we have him here today, including ESOP transactions, assisting with plan design, evaluating feasibility issues, and guiding clients through administration, compliance, and repurchase obligation. Adam Fayne, who is resident in our Chicago office, assists companies and individuals nationally and internationally on corporate and tax issues. He has deep cannabis industry transactional experience, and he previously served as a special assistant U.S. attorney with the IRS. All right, gents, let's get into it. We'll be exploring converting cannabis businesses into ESOPs through this roundtable discussion. So let's kick right off. Andy, I have a question right out of the gate for you. What makes a company a good fit for an ESOP?
That's a great question. And one of the great things about ESOPs is that, they're not specific to a certain industry or size of a company. They can work in most companies regardless of size or industry. An ESOP must be primarily invested in employer stock, and the IRS interprets that literally, meaning that an ESOP generally must be formed with a corporation. It could be a C corporation or an S corporation. There's different tax benefits for each. But a company with a different structure, if you're an LLC, for example, you can always convert to a corporation before selling to an ESOP. The other thing I touched on is the size of the company. There's really no limit on the upper end. When we talk about ESOPs at public companies, we're talking about something that operates a little bit differently. But with private companies, we've worked with ESOP companies with as few as 25 to 30 employees and an enterprise value of $2 million or less, all the way up to nine-figure enterprise values. So there's not really a small size issue, other than a couple of things: making sure that the costs of setting up and operating an ESOP are justified by the size of the company, meaning are the tax benefits going to more than offset those costs? And on the employee-based thing, there's certain compliance testing requirements that we're not going to get into today, but can be a little bit more complicated if you have a really small employee base.
Excellent. Thank you so much. Adam, a question for you. What's the current landscape of companies converting to ESOPs? Do we know in this industry roughly how many companies have converted?
So the short answer, Jonathan, is no. We don't know exactly how many companies have converted. It's not a public transaction. So when companies convert to ESOP, and we advise companies of this, it doesn't get reported anywhere. We have not seen any of the publicly listed companies convert to ESOPs. We have had questions about that. And as you can imagine, there's a lot of moving pieces to converting a public company to an ESOP. So we haven't moved forward with any of those transactions yet. It doesn't mean it won't happen in the future, but we have not seen that yet. On the private side, there have been some publicly announced cannabis companies converting to ESOP. So there are a few announced companies. There are many that have not been announced, and there's just simply no reason to announce it. It's up to the company if they want to put out a press release. But we are constantly fielding phone calls and inquiries, and doing reviews for various cannabis companies around the process for their company to convert to an ESOP or sell to an ESOP, depending on how you want to say it. There's an analysis involved when you got to look at the current organization, how management, how control and governance, the desire for control and governance, stuff like that. So I expect a lot more to continue to convert, but it's not publicly listed right now.
Great, thank you.
Andy, give the audience an idea. Why are business owners, why do they want to sell to an ESOP?
Absolutely. Thanks, Adam. An ESOP is both a benefit plan and a way to sell your business. So the reasons often center around those two things. And owners looking for a liquidity event who also want to reward their employees. In other words, it's a way to kind of cash out of your ownership while preserving your legacy and protecting your company. For example, if you sell to a third party, they may have different ideas about running the business. They may consolidate operations, maybe even move some jobs out of the community. And an ESOP is a way to continue on with the business without bringing in a third party investor. Provide a good retirement benefit for employees. Give them a stake in the operations, which tends to drive up productivity. There's been studies on this that ESOP companies are generally more productive. 10 years longer, there's less likely to be layoffs, and so it can really enhance the culture of a business as well. And there's also some practical reasons. You may have one owner who wants to take some of their shares off the table, gain some liquidity, but also maintain ownership, even majority ownership, in a partial ESOP in one company. Or you may have multiple owners, and not all of them are willing to sell at the moment, and there's maybe not upcoming management ready to take those shares. So you do not have to go 100% ESOP. You can go in stages, whether that's with multiple shareholders or just one. And one of the biggest reasons, or one of the bigger reasons, I should say, is the tax benefits for both the selling shareholders and the ESOP company. Adam, would you mind kind of explaining some of those tax benefits of selling or converting to an ESOP?
Yeah, so I believe everyone watching this is watching this because they're in the cannabis business and they understand that cannabis businesses are burdened with Section 280E of the Internal Revenue Code with these high tax rates. So once you sell your company to an ESOP, 280E is just not applicable anymore because ESOPs don't pay taxes. So there isn't a 280E burden there. So all that 280E, what I'll call nonsense, because we all are plagued by it, becomes irrelevant in an ESOP.
And Adam, can I just add a little bit of a caveat there?
Sure.
And so we talked before about the structure being an S corporation or a C corporation, and what Adam's talking about there is the income that's passed through. An S corporation is a pass-through entity, and the S corporation income that's passed through to the ESOP as a shareholder is not taxed at the federal level. And so while 280E may still technically apply, it just doesn't matter anymore. The taxable income is technically higher, but the quote-unquote taxable income just isn't taxed. And so at the 100% ESOP-owned S corporation, it does become irrelevant.
Right. Thank you for clarifying that. Appreciate that, Andy.
Absolutely.
Yeah, and we just talked about this, but maybe we could drill down a little bit. I think it's a good segue. So, Adam, you and I talk about this all the time. We're getting questions from clients, from reporters, from stakeholders. What's going on with rescheduling? There's a proposal on the table to reschedule from Schedule 1 to Schedule 3. I alluded to earlier that one of the features of 280E is when you're trafficking in a Schedule 1 or Schedule 2 controlled substance, 280E applies. So let's assume, let's dare to dream here and say that rescheduling goes through. If we go to Schedule 3 and 280E no longer applies, what's the conversation then?
Yeah, that's a good question. If first of all, Schedule 3 has not happened. Everyone on this call must know that. But for those of you that don't, Schedule 3 has been pending since the Biden administration. It hasn't moved under the Trump administration. We don't have any visibility on if and when that's ever going to occur. If your only motivation for an ESOP is to get rid of 280E, which that is to have 280 not apply, to not be that giant burden anymore, and some companies do. If Schedule 3 does occur, there really is no reason to do an ESOP. If that's your only motivation, there are other motivations that Andy has already discussed for converting to an ESOP. But if your only motivation is to find a path where 280E isn't such a burden, then today that ESOP is a great option. But if Schedule 3 occurs, then 280E wouldn't apply to cannabis companies going forward. So ESOPs wouldn't be necessary for that part alone. There are some nuances around that, because if Schedule 3 happens, there could be some bifurcation of adult use, medical use, but this is not the forum for that. But generally speaking, if Schedule 3 occurs, 280E would not be applicable anymore. And so therefore, converting to an ESOP solely for that reason would lose its benefit. Great question.
Yeah, and there are other tax benefits for an ESOP that would still apply, but yeah, Adam's right about the 280E comment. That what I mentioned before about S corp income, that's still not going to be taxed. So as a 100% ESOP owned S corp, your income still would not be taxed at the federal level. And if you're a C corporation, there's other tax benefits as well, deductible contributions and those sorts of things too.
Yep, great point.
Jonathan, as our attendees know, the cannabis industry is primarily regulated at the state level. What are some state cannabis law considerations for an ESOP conversion?
Sure. So it's a timely question, especially in a state that I do a lot of work in, that we as a firm do a lot of work in, which is Maryland. The Maryland legislature passed, and our Governor Moore recently signed just a handful of weeks ago, basically an exception to the ownership transfer moratorium. What I mean by that is, in Maryland, when adult use hit and became live on July 1st of 2023, one of the features of the Cannabis Reform Act is that you could not transfer the majority stake of your ownership to anyone. What I mean by that is, so it has to be less than 50% inside of 5 years. So said a little bit differently, if you converted your medical license to an adult use license and you were operational July 1st of 2023, you can't transfer the majority of your equity, your ownership, to another party until July 1st of 2028. So we've talked about converting businesses to ESOPs, but before this law, states like Maryland, and Maryland's not the only one, by the way, that has one of these moratoriums, and that's a conversation for a different day as to why these states have these transfer restrictions. But the legislature had to, in fact, make a change to the law and specifically say that you could convert to an ESOP and not be violative of this transfer moratorium. So, we've gotten down into the weeds a little bit. What I would just pull back and say is you really need to understand what your state, wherever you're operating your cannabis business, whether it's Pennsylvania or New York or New Jersey or Illinois or wherever. The majority of states in the country have a cannabis program, so it could be one of a host of states. You need to understand whether the state has thought about ESOP conversions, and if so, have they addressed in the cannabis laws and regulations whether or not this is so-called a permitted transfer, or if in fact it's treated like any other change of ownership. Because there, as we all unfortunately know, there are very restrictive rules on your ability to sell the majority stake of your business. And prior, again, to this law in Maryland, an ESOP conversion, even though, again, it's an employee stock ownership plan, it was treated as a change of ownership. And now there are requirements and disclosures that need to happen to regulators in a lot of these states, but it is not, from the starting point, prohibited.
And Andy, Jonathan, thanks for that feedback. Assuming that we can do it, right? Assuming the state's permitted, as you were just talking about, Jonathan, and I know we've been talking a lot about a number of states out there and how to accomplish this in those various states. Andy, let's give the audience a general idea at 30,000 feet about how an ESOP transaction actually works.
Sure, absolutely. So I guess the first point is that if you've been involved in non-ESOP M&A in the past, it's much the same with a few significant differences. The buyer here, being the ESOP, of course, it is represented by the trustee, an ESOP trustee who acts for the benefit of the employees of the company. And in that role, the trustee is going to have legal counsel negotiating the transaction documents and a financial advisor that's going to be performing a valuation of the company. And the trustee is going to look for an opinion from that valuation advisor as part of the transaction. And because there isn't an outside buyer coming in with a cash offer, like there may be if you're selling to a competitor or if you're selling to private equity or something like that, the purchase price is going to be paid out of future cash flow of the company, whether that's through loan payments to a bank that helps pay part of the purchase price up front, or whether it's seller notes to the selling shareholders. And so that's a little bit of a difference. And so the selling shareholder still does have some stake in the company, oftentimes just kind of shifting from an equity interest to a debt interest. And the timeline for an ESOP transaction is similar to a third-party sale as well. And so, the same factors that can slow down any M&A deal can also slow down a sale to an ESOP. Negotiation over the terms, getting financing in place. All those same things apply.
Plus, Andy, there's an additional consideration here. Jonathan touched on it just a minute ago, but there's the regulatory consideration. So, Jonathan, let's drill down on that just a bit. What does a cannabis company wishing to convert to an ESOP need to do to get regulatory approval?
Right. So as I alluded to a few minutes ago, because all these businesses are federally illegal, it's a state by state analysis, right? So Maryland's rules are going to differ than Pennsylvania's and are going to differ from New York. And so the first thing you need to do is understand, to my point a few minutes ago, has the state spoken on this? And even if they allow it, what are the requirements? You're still going to need to disclose something to the regulator to let them know, because your business is going to look different, even if just on paper, than it did previously if you're converting to an ESOP. So, look, if a state has allowed this, and states are starting to understand, because the states are really the laboratory of the cannabis industry. And without these states, the industry wouldn't exist. I know sometimes state regulators and regulations can be a bit of a headache, but again, they're doing far more than the federal government is doing. Just because they allow an ESOP transaction and don't consider it to be violative of this transfer restriction, to the extent they have a transfer restriction, which at this point most of them do, that doesn't mean there's nothing to do that faces the regulator. It could be a disclosure, it could be the transaction documents related to the ESOP, just the plan features, so to speak. So the short answer, and again, this is a longer conversation than this call, you need to understand whether the state that your business is in has requirements, allows an ESOP in the first place without violating this transfer moratorium, number one. Number two, and more importantly for this consideration, what you need to disclose to the regulator, and for timing purposes, what their review period is. Is it a pro forma review? Is it just you submit it and then it's essentially deemed closed, so to speak, to use a transaction term? Or is it something you need to wait for approval, affirmative approval from the regulator? So unfortunately, it's a state by state exercise, but Suffice it to say, you do need to understand what each state requires. And even if you're a multi-state operator, each state is almost certainly going to be at least slightly different.
Thank you. That was very helpful. And with that, I think we are just about out of time. I do want to thank my fellow panelists, Andy and Jonathan, for participating today. I certainly want to thank all of you participants for joining this webinar and listening to us talk about the cannabis businesses and the benefits of converting to an ESOP. I'll leave you with this. If any of you have questions or would like to talk a little bit more about this, feel free to reach out to any one of us. Call us, send us an email. Our virtual door is always open, and we're always happy to talk with you and chat through some the options around ESOPs and your cannabis business. So thank you all for joining. Have a wonderful, wonderful day, and thank you very much.